Very busy earnings day yesterday, so our machines are only going to look at some of them, otherwise, this podcast would become too long. We are taking a look at Microsoft, General Motors, Raytheon, General Electric, Texas Instruments, and UPS. Please bear with us for a few more months as we are preparing the automated news part of our platform with customizable feed, search, and podcasts.
Microsoft announced results on April 26, 2022. Interesting facts picked up from the call. In our on-premises server business, we expect revenue to decline in the low to mid-single digits as demand for our hybrid offerings will be more than offset by the strong prior year comparable, which included 4 points of benefit from contracts with higher in-period revenue recognition, as well as continued transactional weakness from the licensing program transition noted earlier. Dynamics revenue grew 22% and 25% in constant currency, driven by Dynamics 365, which grew 35% and 38% in constant currency, substantially faster than the market, although a bit lower than expected as we focus on stronger execution on our recent investments. Windows commercial products and cloud services revenue grew 14% and 19% in constant currency, ahead of expectations, driven by demand for Microsoft 365 with some benefit from a greater mix of contracts with higher in-period revenue recognition. All up, the number of customers who trust our security solutions grew nearly 50% year-over-year to 785,000, including Citrix, Domino's Pizza, Fujitsu, Heineken, and Petronas, who rely on us to protect their multi-cloud infrastructure. At a total company level, headcount grew 20% year-over-year as we continue to invest in key areas such as cloud engineering, customer deployment, LinkedIn, and sales, and included approximately 4 points of growth from the addition of Nuance. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Maybe if you give us some kind of insight into what gives you guys the confidence to put out that guide, to put out those healthy comments for FY23. What are you seeing that could really help give us and give investors a little bit more confidence in the durability of this growth in this environment? And can you give us any sense of the sizing of how much of the growth, not just now, but going forward, do you think is going to come from frontline users? And so, I'm curious, what in your view is allowing your Azure trajectory to show better resilience? And do you, in fact, see some of the newer products kicking in, such as Azure Arc or Synapse Cognitive Services, OpenAI, and perhaps contributing to the strength and health and resiliency of that Azure number? But if I walk up this, one thing that we look at is growth coming from all segments, right? And really the more important related part is, given the outlook that you may have for the PC market, how are you thinking about the durability of the Windows side of your business? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About investments, the sentiment was 50% positive. About growth, the sentiment was 65% positive. About outlook, the sentiment was 86% positive.
General Motors announced results on April 26, 2022. Interesting facts picked up from the call. Overall, we see the availability of semiconductors continuing to improve and are working closely with our supply chain partners to help deliver our full-year total company wholesale volume goal of 25% to 30% growth. Adjusted automotive free cash flow was break-even for the quarter, an improvement of $1.9 billion year-over-year, driven by favorable working capital, partially offset by higher capex and non-recurrence of a GM Financial dividend during the quarter. These trucks have new designs, technology, and improved functionality, including a new 13.4-inch infotainment screen on most models, Super Cruise with hands-free trailering, and new off-road and premium models like the Silverado ZR2 and the Sierra Denali Ultimate. To help meet demand, we will add a third shift at our Oshawa assembly plant during the summer to build both light-duty and heavy-duty models. As a result, and to be transparent, we increased our full-year EPS diluted adjusted guidance by 25 cents to address this transaction as directly in line with our capital allocation priorities to invest in businesses that drive outsized growth opportunities given the tremendous long-term potential we see at Cruise. Turning to our 2022 outlook for the calendar year, we have a number of tools at our disposal, as we've demonstrated, to help offset higher costs and are taking active steps to ensure that we deliver on our full-year 2022 guidance range of EBIT adjusted of $13 to $15 billion and North American margins of 10%. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Nicole, can you help us a little bit though, on the timing for those agreements, and assuming all goes to plan, how much raw input is already secured for that 400,000 units over that 22 to 23 time frame? So just to clarify, Is there any change going forward in the company's strategy as you sort of anticipate that those effects on the consumer and rates going higher? Can you talk about your confidence in being able to pass on higher prices to consumers given some of the signs of weakness in consumer spending late? Do you have any revenue guidance to put against that as you launch the commercial service, or should we consider that the $2 billion cost is basically your EBIT for the year? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About prices,
Raytheon announced results on April 26, 2022. Interesting facts picked up from the call. Despite the impact of COVID variants early in the year, we continue to expect that the commercial aerospace recovery will remain resilient and will drive growth in commercial aftermarket and narrow-body OE deliveries this year, notwithstanding the fact that global RPMs grew roughly 4 points less than we expected in the first quarter. Commercial aftermarket grew in line with our expectations as operators began preparing their fleets for the summer travel season. In addition to the awards that Greg discussed, RMD also booked about $385 million for S-Caliber Rapid Demo for the U.S. Army, about $220 million for AIM-9X Sidewinder for the U.S. Navy, U.S. Air Force, and international customers, and about $220 million for Patriot Engineering Support Services for the U.S. Army and international customers. On the defense side, as Greg mentioned, we are optimistic about the President's fiscal 23 budget request, which included a 5% base budget increase in the modernization accounts, where our investments in technology and innovation are well aligned to the administration's priorities and our major programs are well supported. Notable defense awards in the quarter included about $1.2 billion of classified bookings at RMD, including a significant competitive award, as well as $650 million for the SPY-6 full-rate production contract, and RIS booked about $1.1 billion of classified awards. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Has that changed the outlook specifically on the full year for the aftermarket, or how would you talk about the recovery in international travel and the risk in the back half of the year relative to what we were seeing so far in China in particular? Yes, Greg, on raw material and labor inflation, are there threshold limits on how much you're able to pass through to customers? More specifically, will the Army replace the current 1,400 Stingers that were sent to Ukraine? Neil, could you comment on the gradients of the supply chain constraints you saw in the first quarter as you look to the second quarter, in particular, the two items of Pratt commercial engines and rocket motors? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, sentiment was 82% negative. About spending, sentiment was 75% negative. About growth, sentiment was 64% positive. About outlook, sentiment was 54.5% negative.
Texas Instruments announced results on April 26, 2022. Interesting facts picked up from the call. Personal electronics was down mid-single digits of a strong compare, and next communications equipment was up about 10%, and finally, enterprise systems was up about 35% off of a weak compare, and the growth was primarily from data centers and enterprise computing. Starting with a quick overview of first quarter revenue, in the quarter was $4.9 billion, an increase of 2% sequentially and 14% year over year, driven by growth in industrial and automotive as well as enterprise systems. And with that, we've got tens of thousands of products that are immediately available on T.com, so they can get more product if they wanted it, if they're indiscriminate of the types of products that they need. This outlook comprehends an impact due to reduced demand from covering 19 restrictions in China which are affecting our customers' manufacturing operations. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So I guess the question is, does the 10% assume that the situation persists through the month of June, or if it gets better between now and June, will that 10% prove to be conservative? To the extent that your competition has kind of passed along foundry price increases and has raised prices, how have you guys reacted to that? Dave, why wouldn't this allow a little bit of the fungibility of your standard product shipments to just increase to those customers and shortages to make up for the shortfall that you're otherwise going to see in China? I'm just wondering. The fact that you guys have mostly internal manufacturing and you're trying to go most direct, does that imply that you have to ship more direct to your customers in China? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About prices, the sentiment was 67% positive. About growth, the sentiment was 90% positive. About outlook, the sentiment was 66.6% positive.
UPS announced results on April 26, 2022. Interesting facts picked up from the call. Capital expenditures are still expected to be about 5.4% of revenue, or $5.5 billion, which includes 2,747 8 aircraft, 2 automated hubs, more than 3,700 alternative fuel vehicles and additional technology investments, all of which will enable greater efficiency in our integrated network and move us further down the path to achieving our 2050 carbon neutral goal. Automation is critically important to deliver service for our customers as well as drive productivity of the automation activities we have underway. Be it automated label application or automated bagging or robotic sort induction, it's a headcount opportunity this year alone of 1,200 people inside our buildings. The investments we've made in our automated facilities, coupled with our productivity improvement initiatives, enabled us to eliminate more than 1,300 trailer loads per day compared to the same period last year, which contributed to the positive operating leverage. If we look at the impact to our business in the first quarter, for the domestic business alone, 55% of the fuel benefit came from changes in the PPG index, 45% of the benefit came from actions that we took from a pricing perspective. Revenue growth is anticipated to be approximately 7.7%, driven by revenue quality initiatives. We anticipate volume will be lower than originally planned, and given the value we offer our customers, we expect pricing to remain firm. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. And I'm just curious, with the change in the volume expectations, with what you're seeing on the pricing front, if that pushes out kind of the cadence of how we see U.S. domestic volumes trend throughout the year, or are we going to be kind of in a more steady state and kind of reducing some of that seasonality like you've talked about in the past? And then maybe for Brian, have you seen any price sensitivity with fuel going up so much? If customers started to trade down and make other adjustments, given how much those prices have run up? Any update on how you're progressing on the $500 million cost savings? Maybe some discussion of a little bit more in depth on how the RFID improving there and commutalization and package collection time. But what did March look like in terms of how much weaker, and then what does April look like? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 75% positive. About investments, the sentiment was 80% positive. About growth, the sentiment was 53% positive. About outlook, the sentiment was 85.7% positive.
I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.